Hey guys, thanks for tuning back into Crypto Mainly. My name's Lee. 278 subscribers, guys. Please do continue to like, subscribe, and turn on the bell. There's lots happening. I'm now sort of free of contractual obligations, and I've started my own Telegram channel and things. The link to the Telegram channel is in the description below. Is a free channel. Please, come join us and get access to that extra content there. That would be great. I am still, I'm over on Twitter. My Twitter is going to become, be brought to life from today. It's been, again, sort of a little bit difficult to share some of the content that I've created in the past. I was working very closely with this gentleman, which I'm sure that you guys will know. But after a couple of years of working with him, actually that's come to an end now. He's moved off to Dubai and things, and is looking at different different opportunities there. So hence the reason I'm off on my own. NFTs. Please do check out my NFTs. I'm going to leave the sale price actually just for today. There has been quite a lot of interest. I said that the last day was yesterday at the current price of 0.15 Ethereum, but actually you can buy by card as well if you prefer. But it is on the Polygon network, so gas fees are very low as well. I thought I'd just mention that. Yeah, there's lots happening, guys. Please join the Telegram group to stay tuned and follow me over on Twitter. There'll be lots of updates on there. Thank you sincerely for liking and subscribing. Please don't forget, guys, it's a new channel. As I've said before, please don't be, please don't. Look at the number of subscribers and let it put you off. Like, subscribe, press the bell for notifications, join in. You can always turn the you can always unsubscribe if you don't find the content provides you with good value. So we've had a couple of successful trades in the last couple of days, and I hope to sort of continue to show you those. So just going to jump straight into the content, guys. Okay, so this is obviously Bitcoin, very nastily actually. We got this this pattern at the top. I did warn of the potential that because of the CME gap that was below us, which you can see here, that we could get, I did say to watch for closes below that 31,200 level, and sure enough, we got the closes below there, and the price has come down. We do seem to be finding some support actually just above the CME gap, and we are getting a little bit of a bounce here, as you can see, and there are a couple of bullish signs actually. On the RSI, we have got bullish RSI divergence, and also on the MACD, we've got a MACD bullish crossover. This is the trade that I'm looking for next, guys. I'm just going to go down to a smaller time frame to show you that. Just be a little bit cautious. There are signs that the price isn't going to come back down. Although usually you would get the prices start to come back down first before you then get the move to the upside. So just watch for that, guys. The safer option obviously is to watch for the price to come back down closer to the bottom. If you do start to see closes below this low here, the candle body lows here, okay, if you do start to see closes below there, then the price is more likely to come down and close the CME gap first. But looking at things as they are now, it does look like we are actually going to get a bounce from this support zone first, and I think that looking at the fib levels there, we'll probably come up to the 0.5 Fibonacci level there, which will then be the bearish retest of this significant descending resistance line here. So yeah, I think that's what we're gonna see. The safer guys among you may want to wait. Wait and see whether we do come back down and get perhaps an entry at a lower price down the bottom there. So obviously then you can look for sort of a better entry and possibly even greater risk reward. And by that I mean if we do get the prices come back down and you get like a lower entry, down at the lows here, you can see that the grey box there is the entry. If we do get prices come back down to retest these lows, you could then perhaps extend the target to still the 30,850 and get a slightly better risk reward. But it depends on your own personal risk profile, guys. Personally speaking, I am happy to enter this trade here, and I've put the stop loss below the candle body lows. I mean, arguably you should really have the stop loss below the wick low here, down the bottom. And that gives you a lesser risk reward ratio. But that's actually a safer option to have it down there. But I think, in summary, guys, firstly, what I think, the safest among the safer people among you, we'll wait to see whether we get the retracement and whether we start to see signs of, even if we get candle bodies which come down, but they actually close above this level here, then that will be quite a safer entry down there. But yeah, each to their own, as they say in trading. And sometimes I think you've just got to pull the trigger sometimes, accept the wins and the losses as they are. Looking at the CME gap, you can see we did come really close to closing it, but we haven't actually closed it. So at some point, we are going to see this roll over and come down. And this was the successful trade from yesterday. So this was the short position that we took from the entry at 31,280 down to the take profit down the bottom there, which was 29,460. So this trade is now finished, and this is the trade that I'm looking for. This is going to be a long position. This is yesterday's trade, which was the short, so we traded to the downside. Now I'm looking for a long position to trade back up to the upside to get the bearish retest. So yeah, moving on from that, guys. This is the Wyckoff. We spoke about this again yesterday, but I'm just going to go over that again. So you've got a couple of peaks here. This area here was the last Wyckoff, which I identified back in the summer of last year. And even I sort of started to lose a bit of hope when we got down into this region, down the bottom there. It just looked like the continuation was going to go. All of the charts were just looking dreadful, and it just looked like it was just going to continue collapsing. But and that's similar to where we are now, and that's classic Wyckoff. So you can see just you've got a peak here, another peak there, and then you've got this bullish drive there, and you've got a peak here, a peak there, and then you've got this bullish drive. So what I'm wondering is whether we see something like this, and hence the purple line that I've drawn here. I'm just going to redraw that for you actually, because that's actually I'm thinking possibly something more along the lines of this sort of pattern here. Okay, so looking at the Wyckoff, guys, I think we've mentioned this before, but I'll just go over it again. I mentioned this in yesterday's video, but you'll see that we've got a high there, followed by another high, and you've got this this bullish push in the center. So you've got a high, another high, and then you've got this bullish push in the center. So what I'm wondering is whether we, as I've said before in the videos previously, this wick low here, it's very likely that the same as this wick low here, is that you do get retests of that wick low. So I'm wondering whether we get from the peak here, whether we see something like this, where we get this kind of action here, which I'll just draw for you. So that would look something like coming down to the lows there, getting a bounce higher, perhaps coming up, coming over, and then down to the lows again, and then obviously start to see the upward movement from there. And what you'll notice, guys, is if we do get down into this zone here above this low, if we look at this chart, which we've been following for a while, it just simply means that the price action would be still in this huge wedge, but it would just be in the low range, the low part of the range down at the bottom there, but still in this big bullish formation, which I do think it is still in play until we break to the downside and we've broken outside of this pattern. This huge falling wedge is a valid bullish pattern with 1, 2, 3, 4 touches at the top and 1, 2, 3 touches along the bottom there. So the pattern is very valid, and if we do get that bullish breakout, it's going to be interesting to see. There's going to be two scenarios in my opinion, and and I've said this before. We'll either come up to just above the bullish support band and battle with the 200, which you can see here, the 200 moving day average. So on a daily time frame at the top there. Okay, so you can see the 200 moving day average is coming down. It's likely to sort of start to level off. This target range is where the bull market support band is, at around about sort of 38,000. So I think there's two scenarios. We'll come up. I think either way, either scenario, whether we go up or down, I think that we're going to come up above the bull market support band into the next couple of months, bounce along, we'll have a couple of attacks at the 200 moving average. The 200 moving average will be tough to break. So at that point, we'll get the decision of either, we'll get the rejection, and this is what I think is most likely, is the rejection and then coming down to the back end of the year. So September, October, November time, I think we'll see that the prices come back down, into the lows, and then we'll see the low, 21 to 23,000 at the back end of this year, sort of September, October, November time, is what I'm thinking is going to happen there. The second option to that is that we come up, we bounce along, we break up, and we see something like this, which is likely. Interestingly, if you look at the time of year where we are now, we're just going into June, and all of this movement here was at the same time last year. All of it, and so it makes sense that on a seasonal perspective, that we do see the similar sort of price action. But obviously the first option was coming up, bouncing along, trying to break the 200, and then come and get rejection and coming down. The second option, which I think is less likely actually, is that we see something like this, where we see this move from the low to the high there. That's a 70% increase in price, and then from this low to the high is again a 70% increase in price. So it is possible that we see on the hopium side, we see a 70%. We come up against 200 moving average, we come back down, we find support on the bull market support band, and then we take when we go up to the measured move of this falling wedge is the all-time high. If we're trading what we see on the charts, which is really what we should be doing, a bullish breakout from here, as long as we can get above the 200 moving average and hold it as support, then we'll be looking for the all-time highs, for new all-time highs. So let's hope for that, guys. Let's hope for the latter option. But please be aware, guys. I do think this is the likely path, is that we come up above the bull market support band, we bounce along, and then we come down towards the back end of the year, September, October, November time, and then we'll be start to have the increase in price gradually over the next sort of 18 months or so, up to the halving, which will be May. It's currently scheduled for May 2024. So thanks for watching, guys. Please like and subscribe. Really appreciate each and every one of you. Please don't forget, like and subscribe, turn on the bell. There's a lot happening now for me, and I'd like you all to be involved in that. So please don't miss out by not paying attention. Everything's new. Please join in. I look forward to speaking to you again soon. Always remember, guys, take profit and buy something real. I look forward to speaking to you again tomorrow.